Welcome to Coin Rodar, where we take a look at new altcoins, inspect what's interesting about them, and analyze from a casual investor's perspective. Let's begin. First token we have for the week is TRU. TRUFi is an uncollateralized DeFi lending platform built on the Ethereum platform. Unlike Compound and AAV, both of which are over-collateralized lending protocols that require a greater amount of collateral for any borrower to take out a loan, TRUFi achieves uncollateralized lending by implementing an on-chain credit rating system that combines both CeFi and DeFi elements. TRUFi's roadmap is followed well, especially with its token unlock schedule, as it is logical to meet increased token circulation with improved utility for each stage of the protocol to support a balanced and sustainable development progress. The TRUFi team is actually part of Trust Token, which first launched the TUSD stablecoin in 2017. Trust Token currently lists a total of 41 members on its website with engineers, legal experts, compliance officers, and marketing professionals, etc. So it looks like they have a very vibrant team. Crunching down the numbers, at present its market capitalization stands at $42.6 million with a circulating supply of 1 billion tokens. The token is effectively capped at a maximum of market capitalization of $1.4 billion. This cap implies that no additional supply will be released when this limit is reached, making it an attractive investment prospect. The current number of holders is 7,914, although it appears to be slightly decreasing this month. Notably, 25% of the token supply is held by Binance, which is a centralized exchange. However, it's important to be aware that this ownership structure may pose challenges related to potential price manipulation in the future. And as always, is it worth bagging though? TRUFi's governance and credit model could very well become a part of an emerging CDFi paradigm through its semi-decentralized philosophy amidst increasing worldwide regulatory pressure. After all, it is difficult to successfully build a bridge without the cooperation from both sides of the river. With TRUFi, this could be easier in the long run, so this is worth looking for, and therefore it is abroad. Second token for the week is CAW. So CAW is a mysterious token launched on the Ethereum network as an ERC20 token with a cryptographic treasure hunt. And so it is a decentralized social clearinghouse. Some speculations is that CAW has the potential to be the next SHIB, with some speculating that the founder of Shiba is a Hunter's deployer. Dream Hunter is also Ryoshi in Japanese. Another speculation is CAW SNS is currently beginning development on the mainnet. As described in the white paper, X will be the front end using the toolkit, and the number of CAW SNS users could be tremendous. X has over 300 million users, and since CAW SNS users are CAW holders, even if it's 1%, that is in line with the number of SHIB holders. If X cooperates, the number of holders could increase as soon as the SNS launches. So this is something to ponder with. So let's dive into the data in terms of valuation. Presently, the market capitalization is at $40 million, categorizing it as a low-cap gem, especially given its vast supply of 666 billion tokens. The uniqueness of this supply figure adds an intriguing, mysterious element to its profile. The number of current holders stands at 23,013, and this figure continues to increase over time, indicating growing interest and adoption. In terms of supply distribution among top holders, it's worth noting that MEXC, a centralized exchange, holds a substantial 25% of the total supply. This ownership structure is something to keep a close eye on and observe for potential implications. And as always, is it worth bagging though? As of now, this token maintains an air of mystery. It is intriguing to note that despite its enigmatic nature, it has managed to secure listings on several top exchanges. What's interesting is that it evokes a sense of deja vu, reminiscent of Shiba Inu, a coin that transformed many early investors into millionaires. For those who thrive on high-risk investments, this could be an opportune moment to consider acquiring this token. However, it's essential to exercise caution and only invest your extra money in this venture. So even if we're 50-50 on this, since this is a pretty interesting token, abroad. Third token for the week is Reserve. Reserve rights or RSR is an ERC20 token that will serve two main purposes for the Reserve protocol. Over-collateralization of Reserve stablecoins are tokens through staking, governing them through proposing, and number two, voting on changes to their configuration. So what's the project's goal? The goal is to have a stablecoin that makes money secure for not just the banked and developed countries, but also for the billions of unbanked around the world who have no safe place to store their money. One of the most impressive things about the Reserve protocol is the team. They have an incredible skill set and very impressive credentials. After being founded in 2018 by a group of 3 co-founders, the team has grown to 10 known members. So crunching down the numbers, it boasts a market capitalization of $113 million, supported by a maximum supply of 100 billion tokens. With a circulating supply of 50 billion tokens, there's an additional 50 billion yet to be unlocked, potentially impacting its valuation in the future. The number of holders currently stands at 16,747, and this figure continues to grow over time, indicating a rising interest and adoption. It's noteworthy that the distribution appears equitable, providing a degree of assurance against potential market manipulation. And as always, is it worth bagging though? The Reserve protocol is competing against a large group of stablecoins and seeking to become the dominant stablecoin globally. It faces many challenges in that respect, but does feature an incredibly strong and talented team that is committed to the challenge of creating a decentralized, global, digital stable currency. Reserve writes it's made significant progress already, but it is a project with a very long-term horizon. If the project accomplishes its goals, this could be a very profitable long-term investment. However, it should be considered a long shot in the current state of development. So for me, RSR is only for long-term investments. And that in itself is an abroad for me. Last token we have for the week is SOLEND. SOLEND, after becoming the winner of the DeFi track in the Solana Seasons Hackathon in June 2021, has come a long way in becoming the leading lending and borrowing platform on Solana, with $935 million in TVL. And as they say, SOLEND is the autonomous interest rate machine for lending on Solana. So basically, it is a lending platform built on top of the Solana blockchain where interest rates are generated algorithmically. SOLEND is backed by the ecosystem's most prominent investors and VCs. This includes the likes of Solana Foundation, Coinbase Ventures, Polychain Capital, Alameda Research. This generates trust in the project and shows the SOLEND protocol's strong backing. The roadmap is also promising and has a lot of developments in place. So crunching down numbers, currently it boasts a relatively low market capitalization of just 18 million, making it a riskier investment. However, its circulating supply is limited to only 37 million tokens, with a maximum supply of only 100 million. This limited supply suggests significant growth potential in the long term. Moreover, the protocol has a total value locked, or TVL, of $18 million, an impressive figure for a DeFi project. This signifies a high level of trust and confidence in the project within the crypto community. One potential area of concern is the supply distribution among the top holders, with the largest wallet holding a significant 49% of the supply. This distribution may expose the token to the risk of market manipulation, and it's a factor to be very vigilant about. But as always, is it worth bagging though? SOLEND has brought the power of DeFi to the Solana network, offering users with many opportunities that have the potential to beef up their profits. Though the whale issue laid bare the vulnerability of the protocol, the silver lining was the developer's ability to handle things. SOLEND is still an infant in the space but already has proven things. If you are a yield farmer and fan of lending and borrowing, this is for you. 4 tokens in Coin Rodar this week, abroad by me. Thank you so much for joining us in this week's Coin Rodar. If you have any tokens you'd like us to look into for next week, just comment down below and be sure to like, share, and subscribe to our channel, Web3 TV. And to all the upcoming altcoins out there, watch out because for sure you'll be under the Coin Rodar. This is Chef Rod. Always be sure to do your own research and see you guys again next Tuesday. Thumbs up.